I think I don't think much people are practicing about cash and liquidity management, because how I found, because no one is uploading the statement. Okay, in the buffer I could see only 2-3 people's, I think 2-3 company codes only. I mean 2-3 bank accounts I could see. Okay, but I'm requesting you people, please try to understand the concept and please try to practice that one. Okay, so once you will be there into the real time, you need to face a lot of challenges. Okay, if you are not understanding at least basic things, then again it will be problem for you. Okay, so it's not only for this one, any concept. Okay, so just for your information. Fine. Okay, so yesterday I just have given overview of treasury, not risk management. Remember, I'm not talking about risk management. I'm only talking about treasury. Okay, so under treasury, what are the activities which are going on? Okay, so I'm going to just give there are three types of activities which we need to perform in the treasury. So these are the activities it will be keep on repeating for each and every instrument, but each and every instrument has a different functionality, different purpose and different usage. Okay, so let us see that one. So now front office. Okay, what is meant by front office? I will explain one by one. Then back office. The final one is a accounting. So these are the major activities which are going in treasury. Okay, so now let us talk about the front office. What exactly front office does? So today, let's say you have decided that you have some excess funds. You want to invest the funds into, let's assume, either fixed deposit or it's some equities, some commodities. Okay, so you want to invest some financial instrument. In order to invest the amount, first what you have to do, you have to place the order. So you have to create the orders. Okay, order in the sense, see, you have the money. If you want to buy anything, what you need to do? We need to buy a order with respective of this money. Then the order is a buy order. Okay, so I want to buy so and so. Either it's a fixed deposit or it's a equity, whatever it may be. So what we need to do, the first one is we have to place the order. Either buy order. See, again, please concentrate. Again, I have given example here. We have a excess funds. Now I'm going to place the order as a buy order. So now I want to borrow money from the market. Then even I can able to place the sell order also. Okay, so now it's a depends on my business requirement, the order. That is the reason I have not mentioned anything buy order or sell order. I'm going to place the order. The order, it could be a buy order or it could be a sell order. Okay, so now creation of orders. Creation of orders. Then so now I have created the order. Okay, I have created the order. Then after creation of that one, we have to pay the money. Okay, now today let's assume you have booked one order through some e-commerce website. What you have to do at the end, you have to pay the money. Okay, the simple logic here also we need to apply. So we have to, once order will be creation, here we have to do the settlement. Settlement in the sense, there will be, as soon as once you place the order, it will be the status it is showing as a locked. Okay, so as soon as once you do the settlement, then only it will be enabled for further activities. What we need to do? Go for the settlement. Okay, settlement of the contract or settlement of contract or order. See, remember why I have mentioned is a contract. If you have experienced in the future and options trading or commodities also, everything will be, it has a contract. Contract is nothing but every contract which has some expiry date. Okay, so there will be a weekly contracts are there, monthly contracts. Okay, so future, I mean upcoming month contracts will be there. It's a depends on which contract you are going to choose. That is the reason I have mentioned is a contract / order. See, order is a different, contract is a different. Okay, then now come to the final one is accounting. What you want to do? As soon as once the order will be settlement happen, you would like to post the accounting entries. See, the money is going out from your bank account, then investment account will be debit, our bank account will be credit. Then in the accounting, there are n number of activities which will be performed. So one is the for buy order. Okay, so the money is going out, then investment account is debit here. Then again, let's assume we are receiving interest from the bank. Again, it's accounting. It's the action need to be taken by the accounting department. Okay, so now I'm going to mention here is the accounting. So accounting is nothing but posting. I'll put it here is the posting of journals. Okay, posting of accounting entries. Then next one is see, I'm just giving few activities which we need to perform. Okay, so now even there are n number of activities are there, but during the configuration, during the execution of end user scenarios, we'll discuss in detail. Okay, but before going to that, at least we should know these are the activities at least. Okay, so now that is the next one is let's say the rollover. So now what is meant by rollover? I have created a contract. The contract validity is let's say the 30th of, let's say the contract validity is the 30th of September. So which will be expired on 30th of September. So I do not want to close this contract. I would like to extend this contract additional one more month. So what I have to do, there is an option. If you want to extend that contract, then rollover you need to perform is a separate activity in the system. Then that contract validity period will be extended. The system itself, it will ask, okay, up to when you would like to have the rollover, the contract validity period. Okay, then even if you want to perform some netting also, netting again is a different activity. Okay, so then reversal. So now in FI, what we are doing, in case if we have done some wrong postings, what we will do, we will reverse the document, then we will post the correct entry. Remember, the reversal not only for the wrong postings, even for month-end accrual deferral activities also, we would like to reverse the entry. Okay, so now if I want to calculate the interest, okay, that will be the part of my accrual and deferral. So on 30th, last day of the month, I'm posting the accounting entry. Then the same entry will get reversed first day of the next month. This activity system itself, it will take care. Okay, no manual intervention to be required. Then reversal is, don't think that one, only the wrong entry.
Sir, netting means 0 to 90 days. Huh?
Which one?
Netting 0 to 90 days.
Huh? What is meant by 0 to 90 days?
Netting.
No. You can explain what is meant by 0 to 90 days.
Period, sir. 0 to 90 days is settled in netting, sir.
See, okay, see 0 to 90 days, it will be settled. Okay, now let's say now there is a different thing also. Okay, netting, either you can go for the 0 to 90 days, or you can perform some, say, let's say now I have entered into a contract. Okay, so now it's a contract value when I have entered is a, let's say, 1 lakh rupees. Now today the contract value which has gone drastically down. So would you like to still continue that contract, right? You cannot continue that until to end of the period. Okay, you need to
Yes.
take some precautionary action, right? For that one. Okay, then only you can either settle with 0 to 90 days. You means, would you like to continue, or would you like to keep that contract until 90 days? Right? You see, you already know. Again, the value to you have invested is 100, let's say 1 lakh rupees. Again, tomorrow or 1 month after 1 month, it came down into 90,000. Again, it came down into 80,000. So already you will come to know the reasons why the contract value which is decreasing. Would you like to continue still until 90 days? You cannot continue, right? Either you need to take some, you need to go for some precautionary measures, like you need to do some average, or you need to exit the position. Okay.
Yes.
Yeah, that is up to us, but we'll say that one. Okay. Fine. So the next one is a exercising rights. Okay, now exercising rights which I want to contract rights which I want to exercise. Exercising rights. So now, okay, contingent liability, even, okay, okay, accrual and deferral, which I will put it here is the accrual and deferral. Accrual and deferral is a mandatory. Then I'm just giving only some are the examples here. Then termination of the contract. Termination in case in between also. Then even we can go for the termination of the contract. Then the last one, I'm just giving, it's not the last one, valuations. So valuations. So these are the activities. But if you can see the some screenshots about the treasury, they might have included different things. Okay, so now front office, again mid office, back office, there are n number of activities are included in that screenshots. But those and all, we no need to remember. The major activities is a front office. See, again, mid office, let's assume they have, I'm going to keep one more column here, like mid office. Again, the activities which are going to split, that's it. Okay, so the settlement of contract. Okay, then they are going to split that activity, that's it. But all will be comes under back office only. Okay, major process would be takes place front office, back office, accounting. Only these are the activities we have to remember this one. Then again, in front office, there might be a, like I have given here is a rollover. Okay, so the position, closing the position. So there are different activities which we need to perform, but only the few things which I have described here. Okay, then here also, then let's see. Now,
So
all these
exercising right, please explain once. That is accruals or deferral.
See, that is what I said. See, exercising rights in the sense, now the contract validity period. Okay, so the validity period, which as I said, okay, exercising the rights. Today, I have entered into an agreement. I mean the buyer and seller in between the agreement. Let's say now I am the buyer. The seller has agreed to make the let's say the 6% interest per monthly or per annum. Okay, let's assume per month. Now we are entering, now I would like to change that one due to the market conditions. I would like to exercise the rights which I cannot able to supply the currency, let's say the currency. Okay. So now which I cannot pay the 6% or I would like to increase that amount. See, I have to pay only 5% or buyer is or seller is demanding that you can pay 7% instead of 6%. So now the rights, whatever we are having, I'm just exercising that one. Okay, either it's an increase or decrease, it's a depends on the mutual agreement between the buyer and seller. Okay, but in detail we will see. So the
Sir, it
approval.
means amount received in advance for which services are not provided.
Which one?
Accrual amount received in advance for which services are not provided. It means accruals. Huh?
Exactly. See now.
Deferral means amount received in advance for which services received or paid. That is right.
See, I'm not going to differentiate in the system. Okay, so the activity itself, I'm going to call it as a accrual and deferral. Okay, again, the accrual and what is meant by accrual, what is meant by deferral, you just go through. Okay, some blocks. Then I will give the example here, accrual and deferral. Let's say you have done some fixed deposit in the bank. Okay. So now the banks, when the banks are going to give interest once in a year.
Yes.
Is it right?
Yes.
Okay, once in a year in the sense, but what accounts department will ask you, see, now once in a year, you cannot directly show that amount once in a financial year in your books of account. Okay, because if you show that entire amount, it will have impact on your P&L account. So that is the reason every month you are not receiving that amount from the bank. Okay, but anyhow, yearly, once in a year you are receiving. But what you need to do, you need to divide that amount, the portion, how much amount which you are receiving from the bank, you need to divide that into 12 months by 12. Then for each month you have to post that one. So that will not have any impact on drastical impact on your profit and loss account. That is the reason accrual deferral. So that is the reason, as I said, so the last day of the month we have to post the accounting entry. Then the next day we have to reverse that one. Sorry, we have to reverse that same entry. So that means it doesn't have any impact on your P&L account. Is it clear?
Yes, yes.
Okay. So now termination of the contract. Termination is nothing but I do not want to continue with that contract. Then I will go for the termination. Okay. So due to some XYZ reason. Okay. The reasons might be a number of. Okay. So now valuation. The final one would be the valuation. What would be my net present value? Okay. So let's say now I have invested into equities last 1 year back. Today, what would be my price? What would be the current position? Okay, whether the position which is running in profits or which is running in losses. Okay, or do I need to take any action over there? So then how I will come to know based on the valuations only. Okay, so the valuation which is going to give. So what is the current status of the position of that contract? Okay, so now we can do the valuations, but in detail we will discuss. Okay, once we will be there into the scenario, I mean, after configuration, whenever we are running the end user scenarios, okay, end user activities, then we'll discuss in detail one by one. Now, we open the system. So all these activities, all these are the activities. I'll put one thing more here. The transaction manager, it's a one umbrella. In treasury and risk management, transaction manager is an umbrella. Under that umbrella, all the activities, I mean, all the components, these are the components, what I'm talking about. Money market, forex, securities, derivatives, trade finance, will be part of my transaction manager. Don't confuse. Let me show you that one. So, like in finance, how we have the sub modules like accounts payable, accounts receivable. The similar way under transaction manager, all these sub components are available. See here. Now go to SPRO, financial supply chain management. From here, treasury and risk management. You can see here transaction manager. So under transaction manager, you can see money market, foreign exchange, securities, derivatives, trade finance. Okay, so all these components which are part of your transaction manager. Okay, so under transaction manager, if anything, if we want to do some configuration for the money market or foreign exchange, only you, I mean, if we can come here, then we can able to see all the products which are available. Again, if I go to money market, what are the instruments which are available? I can see here. Now, okay. So now, so these are the activities which I have explained. Now let me go to the some quick glance about the treasury. So these are the terminologies which will be repeated. Money market. Now let's say the first, okay, before going to money market, let me explain about the product types. So what is mean by product type? A product type is a financial instrument, okay, which you can use, either you can borrow the money or which you can invest. Okay, the product type which is a financial instrument. Remember, okay, even this kind of questions also in interviews they may ask you. You need to remember the product type is it's a financial instrument where we can differentiate your investments. Okay, so now let's say fixed term deposit. Fixed deposit is a one kind of investment. For that one, which I have to differentiate in the system, let's say now I have the fixed term deposit. Fixed term deposit. Fixed term deposit is nothing but a fixed deposit. Then let's say now I have the variable interest. Variable interest instrument. I'm just giving the example. Let's say the forex investments. Let's say the equities. So, or it's a commodities. So now here I have different kind of financial instruments are there here. Okay, so now how I can differentiate in the system? Again, this is either fixed term deposit is a buy or sell. Okay, again, it's a depends on the requirement we can perform. But now, how can I differentiate in the system? What is the fixed term deposit? How can I recognize this in the system? The variable interest rate instrument, how can I recognize in the system? Because the way of usage fixed term deposit and the purpose of fixed term deposit is a different. Variable instrument is a usage is different, and completely the business process is different. Business need is a different. Forex, this is also each and that is what I am keep on telling. So each and every product has a different functionality, different usage. But now how can you differentiate these products, these instruments in the system? So now that is the reason, if I can go here under money market, product types are there. So each and every sub component has a product types. You can see here 51A, fixed term deposit borrowing, fixed term deposit B. Okay, 51B, somebody has created this one. Okay, then deposit at notice, commercial paper, interest rate instrument. You can see here interest rate. Again, this will be the variable interest rate, fixed interest rate. Again, you can see here interest rate hedging here. Okay, facility is there. So there are different kind of product types are there. See now. So now these are the standard SAP delivered product types which are available. But if there is a business requirement, but most are the cases in real time, they can use a standard product type. But as I mentioned in the yesterday session, I am not going to use any standard product type. Okay, I will do the I will create the new one. Then only we will come to know what exactly, I mean, the product category. We don't know. Okay, if I use the standard product type, I don't know about the what is mean by product category. What is the mean by the transaction type? I don't know all. I mean, okay, so that is the reason I'm going to create all together. Then to differentiate, now you can see 51A is my fixed term deposit, 560. So if I go to again into the Forex, you can see spot transaction, forward transaction. You can see here foreign exchange. Okay, so again, you can see here all you can see product category is a Forex transaction only. But if you go to inside, there will be a difference. There will be a difference. 60A has different functionality. See, now you can see non-deliverable forward contract. You can see here. So there is that is what I'm telling. Foreign exchange. You can see again it's not selected. So in the foreign exchange, we can see the spot contract, forward contract. Again, swapping also will come into picture. Okay, we will discuss about that one. Then again, that is what each and every instrument, each and every component has a different product types. Again, you can see under securities, again, define currency, units, master data. You can see product types. Again, define contracts, assign define product type for the securities. You can see now again stocks, money market funds, bonds, variable interest rate, fixed interest bonds. So n number of things will come into picture here. So each and every component has a different product type. So that is the reason, as I said, the product type is nothing but it's a financial instrument to differentiate the investments. Okay, so now even in the document also I have already, I have separated document for that one. I will place today the last sessions one and today's what I have discussed. So which we need to understand the product type. Okay, one moment. Let me pull out the document. One moment. I'm stopping the screen just for a minute. The document. Treasury. Sorry. Fscm. Okay, let me on this. Okay, I'm presenting my screen. So the same document will be available even in your drive also. You can see here. So now The product type classifies a financial instrument in SAP Treasury and a risk management. So differentiation, that is what. So each product has a different functionality, different usage. Okay, differentiation is necessary as the individual instruments, okay, are subject to different processing rules and are to create the different levels of reporting. Example product types are intercompany loans, okay, forex spot transactions, okay, forex forward contracts. I just have given example. Then anyone need any clarification about the product type? Okay. Then moving to the transaction type. So what is mean by transaction type? So the transaction type is a nothing but a so now transaction type. So we have seen the product types. Transaction types. So what is mean by transaction types? Now, as I mentioned here, so while placing the order here, while creation of the order or while placing the contract, as I mentioned, either the order could be a buy order or it could be a sell order. How can you differentiate between buy and sell? So that is where the transaction types will come into picture. Okay, so the transaction type in general, 100 is a buy, 200 is a sell. In general, these two, the regular practice which we are going to use. Let me show you that one in the system. Money market. But again, the transaction types, it's a depends on the product type. It has the different, but for money market, you can see define number ranges, define transaction types for the money market. You can see here. So the transaction type is 100, 200. 100 is for investment. Investment is nothing but a buy. That is what I have mentioned. Straightforward is a buy. Buy is nothing but, okay, you are investment. You are doing investment. 200 is a borrowing. Okay, so again, there are, you can see here 210 is there, but most of the cases, this and all, we are not going to use even in the real time also. 100, most 99% will be used 100 and 200 only. 100 and 200 will be the transaction type. See, the product type is interconnected to your transaction type. See, 100 is the investment, 200 is the borrowing. Then, now, you can see here, okay, so now I can able to view altogether. So now transaction type. So the transaction types are defined with respect to the product type and subdivided the product types by type of transaction. For example, the transaction types for a product type representing a bond may be buy and sell. Okay, so in between that, so okay, the difference between here buy and sell will be there. There. Now, okay, anyone need any clarification? Only two things are there. It's a depends on the requirement. We need to choose the transaction types here. Now, moving to the derived flows. What is meant by the derived flows here? So, derived flows. So, derived flows are nothing but a now let's say now what I have done in general scenario, I'm going to explain. Now in India, we have to pay GST on each and every either buy or sell transactions. Okay, I'm just giving the example. Either it's a okay, so GST, either it's a intrastate, or it's a central GST or state GST. That's depends on the business need. Then we need to apply that one. But now, if I would say directly, you cannot in Treasury. The first thing is that you cannot calculate or you cannot apply taxes directly on Treasury transactions. The first thing is that because all your either even including withholding tax also. Okay, all the configuration we need to do at FI level. Then based on the tax code which we are assigning to the business transactions while posting a documents, or while we need to map some conditions if it is a MM and SD. Then based on that conditions, the system will determine the tax code and it will calculate the tax amount. But in Treasury, we do not have any functionality to key the tax code directly. So that is the reason I cannot directly calculate the tax for my Treasury transactions. So this is one of the example. Okay, so what would be the solution for that one? Because without that one, I cannot post my transactions because that should be part of my accounting. So there is a derived flows option which is there. Over there, either you can calculate the tax outside, then you can enter the amount, or else in order to most of the cases, what will happen? Then there will be some amounts. Okay, the fixed amounts will be there. Then we just need to key the amount directly. Okay, in case if still the volume of the contracts will be more, we need to think about that one. Okay, so now I have given one example. The second example is that if you have experienced, let's say now today you have purchased some equities, you have purchased some shares. Then what you need to do? In that you have to pay brokerage charges, you have to pay some taxes, you have to pay some SEBI charges, you have to pay some security transaction charges, stamp duty. Again, you don't know, the percentage will be decided by the either SEBI. Okay, how much it's based on the quantity or based on the price which you have purchased. Based on that, we need to pay the charges to the government or to the broker also. At this point of time, there might be a different charges are there, different percentages will be there. Okay, so now, so that percentages I cannot directly apply in the system. Okay, in order to apply that one, okay, let's say some 10% which I want to apply as a GST. Then there is a solution is there, derived flows. I need to do the mapping the flows into the derived into the main flow to the main flow. Okay, what is my main flow? Either buy or sell. For that flow, I need to map the respective transaction. Then the system will allow me. Okay, let me show you one thing. Let me show you one thing. Zero the tax calculator. Let me show you one thing. Zero the brokerage calculator. Here, if you can see here. So see now, let's say here. Okay, you can see here we have to pay. You just focus about don't. Okay, for this much turnover, you have to pay brokerage. This much brokerage. Then this much security transaction charges. This is the exchange transaction charges. All together, the total value is a 203 rupees, which includes. Then I have to pay this much amount. See, either you can directly show this amount under one head, but business will not. Business will think that okay, why I need to show this one? I mean, what would be the breakup for this one? Brokerage charges, security transaction, exchange transaction, I mean, exchange transaction charges. So everything they want to show as a individual item, So that is the reason, in order to achieve this functionality, even by percentages also we can maintain by using the derived flows functionality. We can map the percentage also. Okay, let's say the STT, security transaction charges, is a, let's say 1%, which I want to calculate on turnover. So let's say I have done is a 10,000 investment. 10,000 into 1% is a 100 rupees. Let's say I have to pay. But in the system, I have to map a condition. So whenever it is happening 10,000 is my main flow. Main flow is nothing but my purchases or sell, whatever it may be. So this will be my main flow. This is my derived flow. So based on this mapping, system will calculate the 100 rupees. So derived flow amount is a security transaction charges. For this one, 1% need to be applied. Then this is the 10,000. This is the 100 rupees. So then for this one, the system automatically it will calculate the amount. Either if you want to pay, it should be appear in your cash flow list in the while creation of the deal. Okay, so there is a either you can apply. See, this is the one way to apply this 100 rupees. The second way is that no need to map the derived flows. Okay, directly system you can enter the 100 rupees. Again, let's say you have created one condition for security transaction charges. What system should do? Without manual intervention, system should apply this condition. Again, this condition, derived flow conditions need to be applied at business partner level. Okay, then only note. I'm going to keep the note. Okay, the condition, the derived flow condition need to apply, need to assign, need to map in BP so that without manual intervention, the system will apply. Okay, otherwise every time, see what will happen, most of the deals will be routed through either most of the organizations will not place the order, will not create the deals manually. I mean deals in the sense, again, creation of the contracts. Okay, creation of the contracts. This one I'm talking about, creation of the orders. So most of the organizations, 10% orders will be created by manually. The rest 90% will be routed through the system. Okay, so again, what is the interface to be integrated, that I will cover later on. But see now, for manual creation, yes, there is an option. Again, the responsible person will create the order, then he will select that one manually. But now, let's say the orders flowing from external system. So if that could be the case, then I cannot, there will not have any option to select manually for this derived flows. System itself should determine, it should apply the amounts. Okay, so that is the reason. Then we have to specify condition at BP level so that system will automatically determine the condition and it will apply that one. Okay, if you see that derived flows are the rules defined and assigned to the automatically created based on the flow in the trade. Okay, a usage of the derived flow functionality is for taxes. Example I have already explained here, taxes, withholding taxes on investments. For example, a derived flow rule can be customized to have a withholding tax flow automatically be created to be 20% of the, okay, interest flow in the financial transaction. So now, whenever we are receiving interest from the bank, because since it is a service related, they will deduct the TDS. Okay, TDS is nothing but your withholding tax. Okay, on that income, you would like to apply. The who is going to pay it? The bank has deducted some amount. They have deducted TDS on behalf of that income. Then you need to apply that one. You need to apply that condition into the system. Then you can do that one, obviously. Okay, that is what I just give an example here. Okay, anyone have any further query about the derived flows? Okay, moving to the flow types. Then, so now flow types defined the flow of trade. For example, an forex forward contract has a buy currency side. Buy is a flow type and sell currency side is a sell flow type. So now I just have given example over there, flow types. So now flow types which are differentiating. So which are differentiating. Now let's say I have placed the order for fixed deposit. Okay, fixed deposit. Then the moment when I placed the fixed deposit order, the moment, let's say now the order which I have, okay, order for fixed deposit. Okay, amount you just forget about. The moment when I placed the order, my accounting entry would be a investment account will be debit to bank account. To bank account will be credited. Remember, this is the order for, okay, buy order, specific order. Okay, buy order for fixed term deposit. Now, investment account will be debit to the bank account. So in this case, whether the money is going out or coming in. So in this case, the direction would be a money is going out here. You can see here. So the bank credit in the sense here, the money is going out here. It's a outgoing. Then flow type. Flow type is nothing but a, okay, either incoming or outgoing. So now this is the debit. Bank is credit is nothing but a, the money is going out from our organization bank account to the respective counterparty. Okay. So now this is what the flow type will be decide whether it is incoming or outgoing. Okay. So flow types are differentiating between incoming and outgoings. Okay. So you need to differentiate between either inflow or outflow. Then based on the flow type, see, I have given only one example here for buy order. Let's say during the year end, you are receiving some dividend. Okay, now I have given example here for the fixed deposit. Let's say for this one, on behalf of this investment, during the year end, you are receiving interest from the bank once in a year. That one also, it's an inflow. Again, it's not the outflow, right? So again, bank account will be debit, then your interest account will be credit. So each and everywhere, depends on the business requirement or nature of the transaction. We need to define flow types here. Let me show you that flow types, how the flow types are defined. You can see here flow types. You can see define flow types for the money market transactions. You can see here each and every, see now principal increase. This is the flow type which is for whenever I'm investing, then which it is increasing, then nominal amount increase. So now principal increase. So each and every flow type has a different functionality. Okay, so now final, you can see for accrue, for you can see final repayment, but 1120 is a different one. 1121, it seems the same, but it's a slight difference will be there. Then you can see installment repayment, annuity repayment, interest capitalization. So if you want to capitalize your interest, you need to use this flow type. If you want to use the final repayment, either the bank might be do the repayment or counterparty, you have to, this flow type should come into picture. So how system should know this flow type need to be automatically system should determine. Again, this flow type will be interconnected to your transaction types. Let me go back here. You can see here, assign flow types to the transaction types here. So based on this configuration, you can see here, this is my transaction type for fixed term deposit, because if you can see here flow type 1100, 1110, 1120. Again, no need to assign all these flow types. Okay, if there is a need, then you can assign this flow type. Okay, again, you can see for most of the cases, the 19 series, which we can use for tax calculations. Let's see 19, because so here it is there. You can see charges, commissions, withholding taxes. Again, here again, if there is a business requirement, here you can see the flow types. Even we can define our own flow types also. See here, I do not see any flow type for my GST calculations. Or I do not see here any flow type for my security transaction charges. This one I'm talking about. I do not see any flow type for brokerage charges, STT charges, exchange transaction charges. Yes, if there is a requirement, even we can create a new flow type. Our own flow types also depends on business need. Even we can create the flow types. But while creation, we have to see, if I go inside of this one, see now we have to ensure this one, but I will explain one by one. Okay, during the configuration, I will explain one by one. What is the use of this checkbox? What is the selection of all these parameters? Okay, we must have to aware all these things. Okay, otherwise we will not come to know. Okay, at the end it will be blank. Okay, we need to understand one by one. Then flow types, we just have seen the flow types are interconnected to your transaction types. Then condition types. Condition types are control how flows calculated by the system are handled, such as the interest, dividend, repayment, and charges. Now, condition types. Okay. Condition types. So there is a equity stock which I bought in last financial year. Let us assume as part of the year end, as soon as once the organization has been announced their results, then after that they are going to give the dividend per share is at 2 rupees. Let's assume 10 rupees. So how I need to capture that dividend on behalf of that particular investment? Then we need to apply the conditions. Based on the conditions, then the system will calculate the dividend. The percentage, either that could be percentage, or it could be amount. Okay, there are two things are there. Some organizations may announce percentage. Some organizations may announce fixed amount. Okay, so again, in order to capture that one, then we have to apply the conditions to the product types, so that while creation of the deal, I mean after creation the deal, then while performing the accounting entries, then the system automatically it needs to calculate the amount and it should get posted. Okay, that is the reason I have mentioned here. See now, charges also. Okay, repayment, dividends, interest calculations. Okay, but again, conditions does not require for all instrument. Keep in mind this one. Okay, so now if I can go here, you can see here conditions. One more, let me show you here. For money market, you can see the conditions type here. Okay, let's see. Let me go to the foreign exchange here. You can see here under update types, the condition tab is there. You can see here under update type, I don't see the conditions. That is what I am telling. The condition types, it's a depends on the nature of product. Okay. So now for money market, the condition types, if you want, you can apply. But for foreign exchange transactions, but why it is not given, that again, that I need to take a call. Okay, I will explain you why the condition types does not applicable for the foreign exchange. That I will explain you. But here you can see here conditions are, it's a depends on your product type, product to product. Okay, it's if it is a need, then we need to apply that condition types. Then now next one. So now you can see here there is a 1:1 relationship between the condition type and flow type. So meaning that the flow type will be interlinked to your conditions. Okay, in other words, okay, I just have given description here. The next one is the update types. Update types control the posting of individual flows. Now, update types here. Update types. So, what you have done here, you have placed the order. Okay, you have placed the order here. Let's say for the fixed deposit. Now, money you have already made the payment. Okay, let's say the order itself, maybe you are going to do the payment after some time, but at least you must have to do the payment. That is fine. But now, what kind of entries I need to update here? Okay, see, while posting this information, I must have to transfer this information into my books of accounts. Investment account is debit, then then bank account is credit. Then I must have to update this information into my books of accounts, right? In order to transfer this information, update types will play the key role. Okay, update types. Okay, you can see here. So update types controls the posting of individual flow. Individual flow in the sense either it's a investment increase, or it's an investment transaction, or it's a sell transaction, or borrowing transaction, or interest receivable transaction, interest payable transaction. The update types will decide that one, what kind of transaction will be. Then define update types and usage. Update types can be defined based on the defined flow types. Okay, the flow types are nothing but either it's an investment increase or a decrease. Based on the requirement, we need to define the update types. Okay, update types. Okay, how you are going to using that one into the system. Okay, at least you need to know these are the minimum basic things here. Okay, that is the reason. Exactly, this is the document for Treasury only. Around it consists of 96 pages. Okay, but around the final document would be around 300 pages. The outcome would be okay. This is only for Treasury basic configuration. Okay, basic configuration and few product types which I have included here. Okay, you can see here front office, back office, accounting, what I have explained. Again, this is a hedging related. Okay, then tomorrow we'll talk about this one. I mean, in the next session. Okay, so now I will place this document. It consists of even it's a cash and liquidity management also. Then you can see the document. Okay, so anyone have any further queries about what we have discussed? Okay, one moment. Let me start.
As of now, it's good.
See, that is